Europe's intra-regional exchange rate coordination has been historically entrenched in the European monetary system. But in the case of East Asia, where the dollar peg has been set for decades now, the loosening process has happened in a less formalized manner. Here to discuss the future of this system, economist Le Jia. Now, currency cooperation in East Asia, do you think it's ever really going to happen?
I think this is a very interesting question. But personally, I think now we are focusing on RMB. But don't forget, in the region, there's another global reserve currency, Japanese yen. So now the question is a little tricky because in Europe before it was Germany mark, right? They play the anchor of the Eurozone now. But in Chinese case, in Asian's case, now they have two candidates. One is RMB. They are on the rise in terms of this market share in this global reserves, in terms of its influence on other countries. But we still have the Japanese yen. So that will involve a lot of tricky and political issues. So I don't think the Asian can imitate the model of the European exchange rate system.
These sort of informalized swap agreements that have been in place throughout the region are really the way forward.
Yes, I think that this swap line, bilateral swap line, I'd like to say they are the new direction for the global currency system and also for the global reserve system. Because as we know, all these foreign reserve, they play very important ensure the central bank, the country have access to liquidities, right? But with these swap lines, that means a country can have access to some kind of liquidity in terms of the different currencies. All these are like US dollar, like RMB, all these are global currencies. So that will weaken the function of the foreign reserve as before. So in the future, maybe we can see that every country decide all these bilateral currency swap line with each other, especially with the important countries like US, like Japan, like China, so that they can meet their liquidity needs when they really have some trouble or just have some shock.
As you talk about the idea of meeting those liquidity needs, yet at the same time being less vulnerable to the shocks of neighboring regions, it makes me think that perhaps Europe should also embrace these swap agreements. Maybe Europe wouldn't feel the topple effect of one destabilizing member of, the monetary system in another area. What do you say to that?
If you look at the history, I think that this kind of idea first start from Japan after financial crisis in Asia in 1997 to 1998. They started to do this swap line system in Asia, but it hasn't been well used yet. Then during the financial crisis, 2008, United States, they start to sign these bilateral swap lines with Europe, with a few other emerging markets to ensure the liquidity in this important financial market. Now the China take over this one. They sign more with other countries, but denominated in the RMB. And of course, now China said that that's a part of the internationalization of the RMB. But in future, all this swap line can put into use. I think that partially the reason why the Europe hasn't used this one is maybe after the global financial crisis, Europe have their own problem. We all know we have this Greece problem in Europe has lasted for several years. Maybe I think in future, when they have now they already have some solution for this Greece. That's good. Maybe in future they are going to sign this swap line with other countries that also help to Europe to increase their influence with other countries.
There's also this fear, though, that we could fall into a situation where these countries rely too heavily on the RMB, right? As they did in the wake of the 2008 crisis, as well as the Asian tiger crisis, when the dollar toppled. Is this a fear of yours, that perhaps the over-reliance will just move from one dominant currency to another?
I'd like to say this is a very helpful, very useful complement to the current global reserve system. It hasn't replaced the current global reserve system yet. So even in Asia, I think most of the countries, they prefer hold this reserve in form of the US denominated asset, because the US, they have very advanced financial market. They can provide very good financial products for them to exchange the foreign reserve to liquidity when they really have problem. So I would see this kind of situation will continue for relatively longer time. As I say, I don't think in the next 10 years, China's RMB can challenge this predominant position of the US dollar in the world global reserve system.